Stock investing for beginners. Tesla stock crashing. Why? We're gonna look at companies that reported earnings last week. Also, I'm gonna show you 8 companies that's gonna report this coming week. I'm gonna tell you if they are undervalued or if I'm interested in buying more or what I would do with those companies. Last week, I started a Monday with 1,200 profits in one day. That was a good day. And the past 5 days, how much did I make? 4,360. So this month we had 2 public holidays, and just choose 1st to 26th. So I made over 14,000 so far this month. So S&P 500, most of the time I use call options, put options, advanced options, stock investing. So if somebody asks me, hey, what do you study or what do you know to make this much money? Stock investing, call option, put options, and advanced option. These 4 are really important for me to make this much money. Does it mean that everybody's gonna make money? No, it's very hard to make this amount of money. Not everybody's gonna make this much, but anyone can make this much over time. S&P 500, it wasn't moving in the morning. It was up, then after it back down, then it's like going back and forth between buyers and sellers. And 5 days, over the past 5 days, it's like going back and forth between 0.77%. So it didn't move much. The past 1 month, it moved 2.25%. Yet today it's up 3.12%. So that's pretty good. It's not even 1 month yet, but we have 3.12%. Nasdaq, it did not move much the same way as S&P 500. 5 days, it didn't matter so much. 1 month, yes. Year to date, 4.67%. If you put your money in your bank, you will need to wait 1 year to make that much money. 4.5%, around that percent, even in CD. But if you put in Nasdaq stock market, you will have already made 4.67% in 1 month, year to date. But if you put in Dow Jones, 5 days, 0.5%, year to date, 1.05%. So if you want to get started, you can open a stock account at any stockbroker in the link in the video, in the description down below. And you can get a free bonus if they still have promotions. So Netflix was up 16.89% the past 5 days, and it was great. So I believe that Netflix could go up a few more days, but the resistance is going to be at 600. And would I buy Netflix at this price? No, I'm not going to invest in Netflix, like I said before. And would I trade? No, I'm not going to do anything. It's okay to skip a few of the stock. I only made a lot of money on Netflix. You can check out this video on January 27, 2,515 in 1 day. Netflix stock jump. You can go and check it out how I made money. I show you step by step how I made money using advanced option for Netflix and a few other stocks. You can go check it out. And Tesla, 13.67% is down. 1 month, 27.62%. Year to date, 26.23%. So 6 months, 31.22%. Going back up and down, but finally it's down. 1 year is 9.95%. So if you look at it, could it go down more? Yes, it could, because there is no support right here. You see, it broke the support at 200 down. The last the support is 187. It broke it also, and 173 will be the next support. Then after that, if it breaks that support level, it's gonna be heading down to 153. It's oversold right now. It's still overvalued. Will I buy as an investment? No, because it did not pass my 5 criteria. And would I trade? Maybe. Yeah, maybe I could trade because it's oversold right now, but it's still overvalued. One of the criteria is that even when I do trade, it should be in uptrend or it should be undervalued. So it's not undervalued, it's not uptrend. So I'm not gonna be focusing so much trading on Tesla. And so why did Tesla dropped? Tesla dropped because of the missed expectation. Remember, there are only two main reasons why a stock drop or jump after the earnings. Their actual result doesn't meet expectations. And secondly, their guidance sucks. Their guidance is worse than expectation. So Tesla reported revenue earnings on that missed market expectation. Their revenue is only up 1% year on year. So it's not a growth stock. So investors now are not going to pay growth stock price. And also the biggest concern was outlook, the guidance. The electric car maker said volume growth in 2024 may be notably lower than the rate observed last year as the company was toward launching next generation vehicle in Texas. The company cautioned investors that it's currently between two major growth waves. And most importantly, Tesla had been cutting prices last year. Since last year, it stayed keep cutting prices, so it doesn't have pricing power. Even Elon Musk said Chinese company automakers are really good. If there's no trade barriers, they could demolish all the competitors. So that's a big threat. That's a lot, Tesla, their earnings per share 71 cents. Expectation was 74 cents. So below the expectation. Expectation is right here. Actual result below the expectation. And revenue 25.17 billion. Expectation 25.6 billion. Expectation is here. Actual result was here. So the stock crashed. And what else? Yep, that's all about it. It's actual result below expectation, the guidance, the future outlook, the pricing power. So yeah, Tesla is not a stock that I'm gonna invest in, but I may trade Tesla using invest options. And next one that reported last week was LMT. It was also down 6.15%. So if you are interested in LMT, this may be a good time to look at it. This is not a financial advice, but I believe LMT is only temporary supply chain issue. So once they are able to recover supply chain issue, if there is a global conflict, a war, so this could be a good way to hedge my portfolio or your portfolio. When World War III happens, everything else could crash, but the stocks like companies like Lockheed Martin, they manufacture aircraft, weapons, their stock could go up temporarily. So it could be a good hedge for conflict. And the next one is Johnson & Johnson. Johnson & Johnson, it went down, so this is not a stock that I'm interested in. Even if it has 8% dividend yield, I don't need to look at the dividend because I can always use advanced option to make dividends, every week or every month. So 5 years it's only up 18.85%. It doesn't even beat S&P 500. Why do I even bother looking at a stock that doesn't beat S&P 500, right? So next, U.S. economy report last week. There was good news, but it didn't matter. The stock was a little bit fluctuating. I'm going to tell you why. GDP was 3.3%, better than expectation of 2%. So this is great. PMI is better than expectation. And you see all these two. Jobless claim, yes, 214. It doesn't matter so much. And plus, people were expecting that a jobless claim should be higher. That Federal Reserve is going to cut their interest rate. That's generally stock markets were expecting. So if it happened, yeah, it's supposed to go up stock market, but it did not. I'm going to tell you why in a minute. New home sales 664,000 compared to forecast of 649,000 because interest rate went down, the mortgage rate. So lots of buyers utilize this opportunity. You see? So the home prices may not go down much because of this. And most importantly, the core PC is only 2.9% compared to forecast of 3%. So it has never been down since 2021, below 3%. That's the indicator that Federal Reserve is focusing on. So it's below 3% for the first time ever. So the stock market should be up. It should be up like crazy the past 5 days, especially Friday. It came out on Friday. It did not go up. So why did it not move the needle so much? It's because of Intel. So if you look at Intel, so Intel dropped because they warned their outlook was bad. So Intel dropped. So the stock market, all the chips, it impacted the chip makers like Nvidia, ASML, almost every chip makers. So that's why the stock market overall drops. Would I buy Intel? No. Intel, in my opinion, is just a turnaround company. It's not a great company yet. So yeah, you could say, if you bought it on February 2023, you will have almost double your money. Yes, you could trade like that. But compared to other stocks like AMD, the last 5 years, 623%. Why would I even bother Intel? And look at Nvidia stock. The last 5 years, 1,586%. So yeah, you could obviously invest in right here, but if you compare the two investors, the return, you still gonna be better off investing in great companies like Nvidia or AMD. So one of the criteria for me is the past 5 years has it been going up or beat the S&P 500. Intel did not beat the S&P 500. It could always go back down. Remember, if a company is in a turnaround, if it doesn't have an economic moat or doesn't have advantage over competitors, it can always go back down. So I'm not gonna risk it. And this coming week, AMD is gonna be reporting earnings on Monday, January 29. Divided it could go up, possibly, but it has been up like crazy for 19.1%, 15% the past 1 month. Year to date is 27.9%. So I'm not sure how much it can go further. So I'm not gonna buy. I only have some AMD. Will I use advanced option? I could possibly use. So I'm probably wait until after the earnings report to make sure because I think that it could drop because it's already overextended. Any bad news can impact the stock much to the downside, much more than the upside. So I'm not gonna invest in AMD. Compared to AMD and Nvidia, I like Nvidia better. AMD is more overvalued than Nvidia. The next stock is SMCI. SMCI is up 66.1% year to date. That's pretty crazy. They are gonna be reporting on the same day as AMD, Monday. Would I invest in SMCI? I need to look at the valuation. I'm not sure yet. And would I use advanced option? Probably not. For options, SMCI is not as liquid as Nvidia or AMD. So its spread is wider than Nvidia and AMD. So even for trading, I need to think a little bit twice compared to trading AMD and Nvidia. But yeah, this could be a good company for trading or investing if the price is right. The next one is Google, Alphabet. Year to date is at 10.14%, and 5 years is at 172.1%. Yeah, compared to Intel, Google have been a better buy. Would have been a better buy even if you have a choice between these two. It's still undervalued in my opinion. And so Google could it go up? I would say 50-50. It could go down or go up. So would I buy more? No, I only have the full allocations for Google. And it's still undervalued. Would I say no? Because it's still undervalued. I'm not gonna sell 700,000 house for 600,000, right? Nobody's gonna sell. So I'm not gonna sell Google. Would I use advanced option? Probably. Maybe I will wait until the earnings is over because it's just overextended. But I can always use advanced option if I change my mind just before earnings. Next one is Microsoft. Microsoft is up 8.91%. 5 years, 293%. P/E ratio 39. It doesn't really matter, so don't even look at it. Dividend yield, I don't care because I can use cover call or advanced option to generate incomes every week or every month. So is they overvalued? It's overvalued in my opinion for Microsoft. So I already have full allocations, and I own Google and I own Microsoft. They are like two of my sons, my sons. So it's okay if which one is perform better. Microsoft skyrocketed after ChatGPT. It used to be the follower of Google. Now Google is following, having to catch up Microsoft. So it's a good thing, but it's overvalued. I can only use advanced option. I'm not gonna invest more because it's overvalued. Would I sell? No, I'm not gonna sell Microsoft. But if it dropped, and if it gets another value, another increase the value, I might buy a little bit more. But so how do I trade? I can use advanced option. I can sell cover call, or I can sell put options. Those are my options that I can use. But for now, I will wait until the earnings. Could it go up after the earnings? I would say yeah, 60%. 60% chance that Microsoft could go up after the earnings. So I could use put option. I could sell put option just before earnings. For that, next one, UBS. I'm not interested in UBS. Year to date is only up 0.61%. 5 years is only up 50.16%. It doesn't even beat S&P 500. S&P 500 is up. Let's go look at it. 5 years, 80.71%. So it doesn't even beat that. If you don't invest in stock that doesn't beat S&P 500, or if you don't use the advanced option, you're not gonna make money like this. 14,550. Only buy great companies at undervalue, below intrinsic value. Then use advanced option. Then you could get these profits potentially and beat the S&P 500. So I'm not gonna invest in UPS because I want to beat S&P 500 every single year. And next one is Apple. Apple, in my opinion, is overvalued. 3.65% year to date. It is not going up like Google or Microsoft or AMD or Nvidia year to date. And Apple is overvalued. The last 5 years it was up 362.21%. It's not bad. So if you ask me, I do not own Apple. I'm looking to get into Apple only at the right price if it gets under value. And then I will use some advanced option to get into Apple. So right now, no. If you ask me, hey, will you buy Nvidia or will you buy Apple? I only have close to 70,000 value of Nvidia. Nvidia is stay a little bit more overvalued. Apple is also overvalued, but I would rather buy Nvidia than buy Apple. I do not have Apple yet, so no. If you have any questions, comment down below. If it's good questions, I'm going to answer at the end of the video or maybe the next video. So next one is Amazon. Amazon year to date is 6.12%, and 5 years is up 95.7%. So I believe this year is gonna be Amazon years. They're gonna beat the earnings, and I believe 70% chance, 70 to 80% chance that the stock gonna go up after the earnings. Right? But remember, anything can happen. It can drop. Any unexpected things can happen. Do not bet. Usually, avoid betting for earnings. You can buy call option, but if you get it wrong, you could lose 100% of your principal in call option. Do I invest in Amazon? Yes, I already own lots of Amazon. Amazon is one of my children. So if Amazon ups, it's good. If it's not, it's okay. So I'm still already profitable on Amazon. It's also undervalued. So would I add more? No, because it's already up a lot. I'm going to wait a little bit drop, probably next month or in March. If it drops and if it gets undervalued, now it's still undervalued, okay, but I'm waiting for it to drop. Then I will add a little bit more. I will use advanced option in the meantime, maybe before the earnings or after the earnings. I can always set put option or cover call. For cover call, I don't want to use cover call because if it goes up like crazy, I need to give my shares to the call buyer. So I don't want to do that. So I'm not going to sell the cover call. So I could use other options, possibly. This one is Meta. Meta's year to date is up 13.82%. 13.82%. 5 years is up 137.85%. It's not bad. So Meta, I do not own it now because I basically sold cover call and the call buyer took my shares away because it just shot through the roof. But it's okay. I used that money to buy better shares, better stocks that drop like crazy. So Meta, do I think it's gonna go up? 50-50. I'm not sure. So sure. I would say 50-50. So if you want to know more about my weekly live sessions, you can go to my channel and go to live, click on the videos. And if you want to know more about stock investing, option trading, advanced option trading, bond investing, and other stock markets, and for anything, then you can go to my playlist and watch all those videos. Share, subscribe. I will see you.